And good morning, everyone. Welcome back to Neely FX. My name is Michael Neely, and this is the channel where we talk about foreign exchange trading, prop firm trading, excuse me, and hopefully making money doing all those things. So it is Sunday. It's time for our weekly Forex look ahead for Sunday, which is today. And let's go ahead and take a look at some. Well, first, I don't want to. A little reminder here. I want you to remind you that if you like this video, then go ahead and hit the thumbs up button. And if you want to see more of these videos, then subscribe to the channel, and we will send more videos your way. And also, if you want to talk to me directly, the comment section is the best way to do that right now, and I will reply as soon as I can. But in the meantime, let's go ahead and get to it. Let's get to our risk disclosure screen because we're talking about putting money at risk and hopefully getting a reward from that. So here is this disclosure. First, this channel is for educational and entertainment purposes only and does not constitute trading or financial advice. I'm a professional trader, not a broker, trading my own capital. I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration at this time. Forex trading is highly speculative with a high risk of losing some or all of your investment capital. Only trade with funds you can comfortably afford to lose. And here's the CFTC risk disclosure. Forex trading carries with a high degree of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before trading Forex, consider your investment objectives, experience, and risk appetite. You could sustain a loss of some or all of your investment capital. So with that, let's go ahead and get into the fund for this upcoming fund for this week. Let's go to the here, and here I have Bitcoin lined up. I'm starting with the weekly charts because this is where we kind of draw lines on the charts and kind of figure out weekly support and resistance areas. I've been experimenting with DeMark support and resistance, just kind of see what kind of predictability there is with that. A little bit, not really a whole lot, but just kind of getting a look at what's going on. But first, let's take a look at Bitcoin and look at this beat down. It has pretty much been, looked like it was going to break out to about 73 and did break out. Oh, 74, how about that? And then that was completely quashed. It went down to 74,047 and now it's back down to 67.2. Don't know what to think about this. So to me, holding this cursor right here, it's looking like the next step is probably going to be 55. Next step down is going to be 55. I don't see this recovering anytime soon. I don't know what's going on with it. I don't follow Bitcoin. I'm not in Bitcoin, to give full disclosure, because I'm a currency guy. And I've said that ever since the very beginning, because holding something like this makes more sense than holding code. You can't hold code. It's my, it's ever since the very beginning, I haven't really wrapped my mind around Bitcoin because I don't think it deserves the attention. But other than that, let's go to the DXY now. Fiat currencies, which are equally as, yes, they're backed by the full faith of the United States government. However, that faith has been dwindling lately, and thus we have Bitcoin, which has now been taken over by the CBOT, by the Chicago Board of Trade, and has also been placed futures on it. When they started running futures contracts on Bitcoin, that's when I thought, need to stay away from that, because now Wall Street's got hold of it. So if the whole thing, it's just, and it's hard to trust Wall Street. Let's just put it that way. Even though that's part of the game, is learning what you can trust and what you can't trust. But at any rate, here is DXY. The dollar index. So right now we are right here for our March high close. I'm not going to draw a line on it because it's kind of immaterial, but we should see a direction of something going on here. But we've got a beat down here on the dollar index too. So it was as high up as 99.6. Now it's down to 98.8. So that's showing considerable weakness where it should have been showing strength, or where the strength did not follow through and get up above 100. 127 is going to be the high. We might want to draw that in there. The November 2025 high, which the 2025 high for all the year would be up here at 109. And that's when we were dealing with massive inflation scares again. And wondering what was going to happen with that. Euro versus the Great British Pound. Great British Pound is pretty much taken over at this point. Looking like might be heading south on that. Right now it's at resistance. It's right at support. Support level right here is indicated by this little structure right here, 86.5. So I'm not really interested in getting in beneath that. I would like to see it break 86.12 if I really saw any continuation of that, into that for the next week or two. Euro versus the dollar. Look at that. That's a pretty massive pull up back into support, back over support right here at 116.5. Pardon me, 116.15. So that's going to be a considerable number to keep in mind for when placing trades here. 116.5 could be the bottom, but then it could be down here at 115 proper. We did see it drop down to 115 this past week, down to 115.30. So anytime that's going to be would be my buy area would be down here, and we're also looking for reasons for it to pop back up, like getting a close below the Bollinger Band and then followed by a Bollinger Band open, or pardon me, close above the Bollinger Band, the 20 period Bollinger Band. That's a mean reversion strategy that sometimes works, sometimes it doesn't. Right now, it seems to be working well. Did not work well here on this time frame, but it might have on the daily or the weekly. Pardon me, the daily or the 4 hour. So you might want to keep an eye on that. We also have I've also built an EA, an expert advisor in MetaTrader 4 that works really well on the euro at 4 hours, and it also works on the Great British Pound versus the yen on a 4 hour chart too. So we'll make that available one of these days. Dollar versus the yen. Not a whole lot going on here. Oh, we haven't looked at catalysts yet for this. Let's go down here. First, we have a lot of, we'll call it unrest going on in the Middle East. Some people call it a war. We have US CPI coming out on the 11th of March. Nothing on Monday and Tuesday, which is unusual. Unemployment claims, and not a whole lot going on this week. Friday the 13th is usually a preliminary GDP. Let's see what happens with, we had advanced GDP last month. This month we have preliminary GDP around 1.4. Let's see if that goes up or down based on that. A lot of data, big data dump on Friday. So not sure how you want to play that. I would play it after 10 o'clock or try to get the little bumps after maybe 9 o'clock and then into the next release of the JOLTS openings, the JOLTS job openings, which usually comes out on NFP week, but didn't this week, or this time. Interesting. So we'll see about that. It's probably delayed due to the government quasi-shutdown or whatever's going on with that. There's so much stuff going on with that, I can't even keep track of it anymore. So let's see. With that, we're topping out right here at 157-ish. So we've got a big, strong area of resistance right here at 157.87 up to 158.13. These are weekly closes, so they're pretty reliable. This goes all the way back to July 2024. So this is good barrier to consider for the dollar yen. If it breaks over 158, where is it? Where do I put this line? Let's put it right here. But it is a 2026 close. Thought I had one in here somewhere that was needed to be moved. No, I guess not. Let's go over here to the horizontal ray right there, and we'll go right here to the, we'll call this the something 158.08. Call that the 2026 weekly high close, and that would be where I would put whether or not this trend will continue of dollar strength and going above that. Right now it's at 157.78, so it's only 25 pips to break out, but it's got to break out and break out with some enthusiasm. The high on it is 159.58, and again 158.98. So around 159-ish, it's going to get kind of sluggish right there again. And then the all-time, not the all-time, but the really high is going to be down around 162. I probably needed to mark that too. But at any rate, that's what we've got right there for our 2026 weekly high close for now on that. Pound versus the, I think this is the one that had the mark on it. But I did take the liberty of putting in a resistance area right here. And it's right at the resistance, the top of this resistance area. Did not complete following through here in the pound versus the dollar. So this is a big, strong pullback on the dollar, the pound versus the dollar. So I think James Stanley is right that the pound versus the dollar is the place to go for dollar weakness. So I will be keeping my eye on the pound versus the dollar versus the euro versus the dollar, on both of them really, until I can figure out what's going on with those. Pound versus the yen. December 2025 high close. Still looking for this target area I had on here that was wrong. But anyway, it's had a 2026 weekly high that is no longer the weekly high. I'll find that, sure, when I look on here and realize I've got two weekly highs one day. Maybe when, right now we're at 211.67. A lot of resistance right there here, as judging by the highs on this through the weeks. Some big, strong resistance right there. I'm not sure if it's going to follow through or not on pound strength. We'll see if the pound's a little bit stronger on that. Euro versus the dollar, not as much. Oh, pardon me, euro versus the pound. Not as much strength in the euro here against the Japanese yen. So there's a pretty clear divergence between the pound and the dollar right now. Pound is significantly stronger than the euro. Pardon me, pound versus the euro. And it shows here. It equally shows up here too. We already talked about that, but that's pretty strong indication that the pound is dominating the euro right now. Dollar versus the CAD. Okay, it's finally hitting a layer. Finally, it went somewhere. We've got this area of going nowhere for several weeks, and that's a good mean reversion play right there. But I think that's finally broken down. Here we have it. I have a pitchfork drawn in there too. 135.68 could head further south though. Again, this is one that I would get underneath if you're going to do this for dollar weakness. Okay, so sorry about that. I had to sneeze. We have 135.63 on this, a dollar weakness. Again, I don't know that I would jump into this, the dollar versus the Canadian. It's just not, from the weekly standpoint, it's not showing me a whole lot. CAD versus the yen. Look at that. Maybe this is the one. No, it's a high monthly close right here for 2025. It's actually wrong. It needs to be about right. Oh, that's a monthly close. Oops. Okay, well, we're going to go back there and leave it there. Okay. This is a high monthly close, not the weekly. So the weekly close is a little bit higher. And then we have the 2027 high monthly close way up here. So that could be what it's headed for. And it's being driven by this, oil. Look at oil go. Got a giant gap here that may never get filled in. That's the rate we're going right now. Again, a lot of things happening in the Middle East right now. I call it a war that is where everyone's beating up on Iran right now. And that's driving oil prices up. Considering that the Iranians may or may not have the control of the Straits of Hormuz, where about 15% of the world's oil goes through. So we'll see about that. So that could be driving prices higher. Not sure what that's going to be until about 8 o'clock tonight. So we'll see that when Tokyo opens. I'm sure there's going to be some speculation driving it higher between now and then, possibly over $100 a barrel. But we would not see that. I would not see that confirmed until the Tokyo Open, because then if it does run up before you're in the CFDs, you're going to see a lot of sell-off as soon as Tokyo opens, and then maybe a rebound. So that's just how Wall Street works: goes up and down, or how the investment or financial world goes. It goes up, it goes down, it goes all over the place. Aussie dollar, Aussie versus the dollar is. Dollar pretty much dominated this past week, but there's also this strong pullback right here too that we also saw with the euro versus the dollar and the pound versus the dollar. So we could see a breakdown in dollar strength this past week, which could translate into next week. And with that, we should have seen a higher gold, but we didn't. We see a lower gold. So we're getting some divergence between oil and gold, which tells me that the oil play is not going to last forever. It never does. I mean, even back when let me see. We'll come back to here. I think I've got some numbers up here drawn. I don't. All right, well, let's go back and do those. Back over here, and we have, right here, we have the 2022 high monthly close at 122. The high weekly close. High weekly close. Right there. And then if you think 120, the market couldn't handle 121, how do you think it felt about back here? Or is that it? That was down back in 2014. I think it was before that. Well, there we have, right there. I don't want to talk too much about this at the time. And that was the puzzle for me because oil was up to 145 a barrel. Let's see, 2008. Weekly high close. So we've got a lot of room for that to run. I don't think we had it above that as far as current records go. That takes us back to 98. That's pretty much when this whole trading view thing got started. So come back down here and come back all the way back. But we've got some precedent for a lot more, a lot higher prices on oil that did not destroy the economy because, hey, we're still here. And you know, we can see it clear, a lot clearer on a monthly chart. We're almost back to where we are on the, there we are. And there we are on today's. So it's a big strong run up in oil. It's what, gee whiz, $23 a barrel run up. So now the good news is that oil has now cost more than an ounce of silver. So with that, we do not see the correlation breakdown between starting to happen between oil and gold, which tells me they usually, in times of severe trouble, severe economic downfall, they usually go up at the same time. But the gold is starting to break away from that. Platinum, nope. That's a bearish engulfing candle right there, if I've ever seen one on platinum. So we'll look to get possibly underneath that this next week. Palladium, if the trend carries, big strong buy area right there, so that may be another huge bearish engulfing candle, but it's in a strong area of support, so we'll see if that holds true, or see if that drops down to about 115. Silver right here, doing, look at that, silver's it's not a bearish engulfing candle. That's just an even candle, so it stops at 84.64. It's get a big strong pullback right here off of the weekly low close of 77.86 we have so far for 2026, which may be wrong. That's 2026 and weekly low close right there. I guess not. I guess it's right there. Again, we could see a pullback conceivably down to 64, but I don't see it the rate we're going right now. We're up to 84 over that right now. Still, I would avoid the silver market. It's very illiquid and things can move on it very, very quickly. Maybe if we're going to, but we are going to take a look at this little piece of news right here too. COMEX silver delivery intentions breakdown. So we have the there's talk that there's a lot more paper silver chasing physical silver than there is physical silver open for delivery. So we could run into an actual shortage of silver that would push the price to astronomical levels, possibly $250 an ounce. But with that, so with that, that's all I've got for today. Looking for a lot of things to take place over this next week that may or may not happen. I don't know what direction the markets are going to go in, but we trade what we see. But that gives you a little bit of a technical idea of what's going on with some of these instruments. Also, something I wanted to point out is the silver stocks are rebounding now. Maybe because software is cheaper and easier to integrate to build. So now they're actually building more software. That may be what's happening, but who knows? I don't know what's happening with that. But you guys have a great one. Continue having a great weekend. We'll get together tomorrow morning and see what's going on with the rest of everything. If you like this video, then hit the like button, hit the thumbs up button. If you want to see more of these videos, then subscribe to the channel. And lastly, if you want to talk to me directly, then hit the comment section and leave a comment, and I'll get back to you as soon as I can. So you guys have a great one. Talk to you later. Bye.